Ladies and gentlemen of the crypto space, it is Monday, 11:29 a.m., October 5th. We are well into the month of October, and we are talking because September was crazy. September was a risk off September, as I'm seeing it nowadays, and is more obvious than ever. And that is the point of this stream. Today's stream is sponsored by Change Angel, a non-custodial swap exchange. Stop depositing crypto deposits and withdrawals. That's so 2016. Stop it. Stop it. Input, output, swap, blocknet, stakenet, DeFi, Change Angel. Win. Win. Look into it. If you don't, you need to. You need to play with these systems. You need to swap using Change Angel. You need to play around with DeFi and know how it works. Most people on my stream know how DeFi works. It's pretty much one of the most important things that we've discussed so far this year, one of the most important experiences that we've had so far this year, because it has produced huge amounts of gains. And that is exactly what I want to talk about today. Be picky, picky, picky to buy and quick, quick, quick to sell. You want to protect your gains and maximize yield. When you are risk on, and we were risk on probably about four to 1 month ago. We had a good 3 to 4 month run of risk on. And I'm going to show you. Let me see if these tabs are loaded. They're loaded. Okay, let's pop it over to the main screen. Let's get some good content up. We're going to bring it back. Use the Wayback Machine and look at a couple months back. So, general point is we need to learn from experiences. We need to learn from 2017. We need to learn from the 2020 DeFi run. Now, a lot of people are late to the DeFi run, getting in towards the end of the entire irrational exuberance experience. And that brings us to a tweet that Luke Martin posted, and Not So Fast, who's a veteran of the industry, responded to, saying that 2016 you could barely see, because 2017 was just so brilliant and bright, filled with an insane price action. And that's absolutely the case. But what I like to do is I still lump all of the events, 2016, 2017, 2020, and what's yet to come, probably towards the end of the year, if not at some point in 2021, if not early 2022, more irrational exuberance. And I lump them all into that category. Price action that has no rationality, and it is just straight up, up, and up. Now, in the effort to conserve and use time most efficiently, we're only going to look at a couple of the Wayback Machine charts because they take forever to load. So, this is July 21st. July, August, September, October. So this was, pretty much where it was starting to get hot. Syscoin, this is when Syscoin ripped that 150% and 326%. Now, this was complete irrational exuberance. Now, bear in mind, Syscoin is old school UTXO and has proven itself as an effective L2 solution to Ethereum. And this was interesting because most things that were ripping, and even Digibyte ripped on this day about 5%. I still consider that a rip. But this is actually a slow day. This was an interesting period during the summer. Let's go over to August. Is this? Yeah, this was more of what I was. This is better representative of what I was seeing day in, day out for months, 3 months. Yearn 38%, Bancor 30%, Balancer 27%, 0x 18%, Loopring 18%, Aave 15%, Numeraire, this thing ripped at a couple 100% at one point. Bat 10%. This was crazy, and Ocean was killing it for a while. Cosmos was killing it. Celsius is now killing it, interestingly. RLC. Look at these numbers. You're scrolling down, and you got still percentage points. This is, and I'm going to show you. Let's look at one more. What do I got? August 22nd. That was the 21st. Is the 22nd, and here was 24 hours later. 24 hours later, Polkadot 44%. BAL 27%, RSR 19%, BAND 15%. Komodo trying to show itself what it's capable of. Chainlink 11%, Yearn 10. I mean, look at these numbers. Cosmos 10%. Let's see if we got one more. I'm pretty sure I got one more. The 26th of August. Ren with the 18%, and Ren's ripping. We might as well take a look at the Ren chart in a couple minutes. But Yearn with the 12.6, Band 12, Polkadot 10. I mean, look at these numbers. 10%. 10% rips. It all ended in September. It all ended in September because even if Aave was ripping 20%, 20%, and then you get a 10% rip, these were so bankable. These rips to the upside were so bankable. You had such a minimized risk-reward profile because there was so much confluence on the charts suggesting at least another leg up. It was like, yeah, this is going at least one more leg up. And this is when you're risk on. This is when you risk on. When you see day in, day out numbers like this. You throw 100 grand into Aave, you're going to get 9.5K. Bam. And then you take your profit. And then the opportunities like that were back to back to back for the last couple months. But then you come over to today. I mean, Yearn. But Yearn was at 30-something thousand, man. So, no, if you looked at the technicals, this 14, here's the kicker. Here's the difference between today and what we were looking back at in July. This 14%, the risk adjusted rewards are probably like 1-2%. If you look at the technicals on the chart, there is probably very little. Look at this. Look at the last 7 days. It's down 35%. The risk-adjusted rewards for this 14.1%, it is not worth the 14.1%. It is not, oh yeah, we're going to get one more leg up. We just rallied 14% because we just dumped 36%. But look at the chart. Look at this. 8%. I consider the 14% an anomaly, but the 8%, this is all nothing of the assets that were ripping back in July and August, and that ended in September. Completely different. It smells different. It feels different. And these are the signs that we have to look for. And this is what we have to learn from 2016, 2017, 2020, and the next one that's coming in end of the year maybe, or 2021, whatever. It's coming. And when you start seeing things ripping, doesn't matter how much you got. Let's say you got like $2,000 you're playing with. This is when you identify the hot ones over a 24-hour period. They're ranking up 10, 15, 20% day in, day out, day in, day out. Maybe drop when the retrace is 5% and the rip is 20%. It shows itself on the chart. That's when you take your $2,000 and you turn it into 4. Turn your 4 into 6. Then your 6 into 9. And then you start to take part of your portfolio and put it into different things. And then you start to have structure and different directions and goals for different parts of your portfolio. And that's how you grow a portfolio. I haven't said hello to everyone who's in the stream. We got Nathan, Earend, Pellets, Genuinely, Tino, Change Angel, that's right, Tino. Nas Boyer, YFI didn't say it. Yeah. But you can't, that's not, the risk-adjusted returns were basically max risk. You had no idea that it was going to go to 20K. So if you put in $10, that's a good deal. It's not like you're going to, there was probably no logic to looking at Wi-Fi at the beginning and putting in like $1,000. That would have been an insanely large number. And that's how you would have made your, 10 mil or whatever, a mil or whatever that could have turned into. But it's not worth the risk. But bear in mind, if you don't take the risk, there's no gain. So some of the richest people have made a huge amount of money gambling, taking the risk. And that's just not something that I promote. I don't promote the risk. I wouldn't have spent $1,000 on Wi-Fi when it first came out, and I wouldn't be the millionaire because of it. I have a very different mentality, and I am more risk adverse, and I would spend more effort to try and avoid loss than to take the risk to get gains. And that's whether that's fortunate or unfortunate. Michael's in the house, my man. That whether that's fortunate or unfortunate, that is what it is, and that's the approach I have on the market. Uh, Man, these were good days. I mean, Ren was ripping. Look at this. I mean, this is how you know the market turned. It was so obvious, man, when everything started ripping down. And this is on the daily. I mean, this is just absolutely an incredible chart, guys. This thing, I can't speak to an entry because that's just not something I really care about at the moment. But this is an absolutely gorgeous chart. Why? Because here's your irrational exuberance. Ignore it. That's just the kids coming into the space that have no idea what they're doing. And it's the same thing that's happening in the stock market. But look at this. Look at that trend. Look at that slope. Now you're talking. Now you're talking investing. Look at that line on the daily. I mean, it's a bit oversold on the Stoke, but this is where you pull out to the weekly. Oh, yeah, guys. Look at that. This thing has a full, it's completely reset. And, and, I can't even, I have so much shit drawn on this chart, I can't even tell what's going on. I believe we're right about here. And, I mean, you go back to June. Here, let's go back. I mean, look at this. Not March. May, you're up, what's 70%? It's 50% would be 100%. There's 150, 200%? I mean, whoever bought this back in literally January of 2020 is up huge. And on the contrary, whoever bought this on August 17th has been, let's see what they're down. So someone bought it all the way up there and is down 50%. So here's the difference in perspective a lot of people are having. And this is short term versus long term. Um, Someone bought it and is down 47%. Someone bought 100 grand worth and they're down $47,000. But then again, someone bought it on January 2020. Look at this. And they're up 500%. Look at that. So that's the difference. Someone's down 50% and someone else is sure as hell up 500%. And the slope, this is a bullish chart. This is bullish. Look at the confluence. You got the Stoke confluence. You got a rounding bottom potentially on the MACD. You zoom in on the 1 hour. You're look at that. That was an awesome bounce off the 200 EMA on the 1 hour. And this is very much a trend shift right here. This is an inflection point because you have many days that this is sloping upward. And you neglect the dip because you're taking an average, and the 200 EMA clearly has an upward slope, and that's what's pertinent. But look at the inflection. You clearly have a downward slope shifting towards more of an upward slope, and that is wonderful to see. Let's take a look at the stream and see what's cooking. John says, "Yeah, man, Ave staking." So Ave is a good deal. So this is where kind of greed and just the wrong approach to looking at the market comes in. So Avi's cranking out 10% yield, guys. You have your money in a bank account. Come on. You're getting 0.02%, but you have your money in Aave, you're getting 10%. So, I had a bunch of Aave because I wanted to be in before the token swap from Len to Aave. I locked my Aave, and these boys are giving me, what is that? $1,000, $1,200 a year, $1,300 a year. That's about 10%. than my original position. 10%, ladies and gentlemen. This is better than BlockFi and Celsius. Celsius and BlockFi aren't giving 10% on Aave. Come on. Incredible. Absolutely incredible. Pellet says next irrational exuberance when Bitcoin. Oh, well, we'll have to reassess the market when Bitcoin hits 17. And who knows? We could have some irrational exuberance at any point in time. All it is human psychology and a cause and effect that just ripples throughout a large percent of the population. Thousands of people could easily cause a very irrationally exuberant event. And it'll come, and sooner than later, it's not going to be 5 years. 3, 2, 2 sounds awkwardly long. Check out Alpha Finance. Yeah, I saw them. I'll wait for them to go up and I'll wait for more information. I don't buy anything. Just like even YFI, I could have turned $1,000 into $1,000,000. No, that's not how I bet. I will not take the risk. Thank you, Matthias. It's not for me. I will wait for it to go up 50% or 100%. But even so, I don't want just a pure Dow. I need a Dow that is actually really, really meaningful. And for me, the most meaningful Dow is Curve, which is really messed up because the price has been destroyed. But this has probably some of the best Dow action I've seen. Um, and a very distributed token because of the initial suppliers were and the vesting and then this is well thought out. Um, and if you go to gov.curve.fi, you can see the proposals. You can list proposals. Um, you can do test votes, and then if you go over here to the Dow, you could do votes. And guys, this thing is ripping 71%. So I don't need. So I got tempted to play with like PiDow, and I did for a bit, and I actually got a 20% rip on it, which is really cool. Not bad for 2 days. So this thing's cranking out 425%, but I don't want the risk. I don't want it. I don't feel comfortable with it. So I don't feel comfortable with Alpha Finance. It's brand new. Who cares? It's brand new. It has nothing. It's proven nothing. They have proven nothing. At least with PiDow, these boys have been around for a bit of time. And I really like their branding. Branding is meaningful. And they used to have one ETF. They're calling a Pi, and now they have three. And so that means they're iterating. So the only thing that turned me off a bit was some of their recent social media marketing, which, in fact, that's why I exited. I think that could turn off the yield. So I wanted to minimize my risk. And fuck it, I put $5,000 in and I cranked out $1,000 gain, and I put it back into Curve. What we do? Minimize risk, maximize gains. Protect your gains, everybody. Curve is getting killed, Nathan. Let's take a look at Curve. It's horrible. What a shame. So 4% TVL, market cap to TVL. So this is broken down from a falling wedge yet again, which is basically an exponential breakdown. But here, guys, this is what you got to remember. When you're buying Curve, stop looking for the stupid Curve to go up. That's the most ridiculous thing. Everyone is so inexperienced in this space. Why are you looking at this when this thing is staring you right in the face, guys? 71.45% yield? Oh my God! And that's very much consistent. You buy 1,000 Curve, you're going to get 71% on yield on that Curve. Denominated in Curve, 71% denominated in Curve, which is 46% per VE CRV. So you're going to log 1,000 CRV for 4 years, you'll get 46 cents per VECRV. So stop looking at CRV. I mean, look at these gains. Look at these gains. That's absolutely incredible. Oh, look at that balance I got in there. What's that balance? What does that balance say? I threw in a couple of Bitcoin. which is giving me 23.8%. And this is basically day in, day out. Curve is giving me curve. 130 curve in the last day or so, 2 days, 20, 27 over the weekend, 130. So now that'll all run right back into mint VECRV, which is done right here. You take your VECRV and you mint you take your CRV and mint your VECRV. Um, yeah, I don't do leverage yield farming on Alphametize, so sorry. Very interesting concept, my man. I try my best. I try my best. I'll entertain any notion, but I don't have really a filter. Sorry. Um, what else? Pointing out that you can get it for free. Yeah, Binance doesn't exist to me. I wouldn't touch Binance with a 10-foot pole. They're just completely off my radar. Um, Pellets, can you explain Ren multi-chain? Yeah, man, Ren is a big deal, guys. Ren multi-chain. Ren is a decentralized data storage technology, more or less. So they have a capacity to store the private keys of any UTXO chain. So Ren multi-chain means I mean, Digibyte's going to be in there. I mean, if you look at the GitHub for the multi-chain, here, check it out. Ren, GitHub, multi-chain. Yeah, Ren and Link, year end, big deal. Yeah, so much FUD on Link. Don't listen to the FUD on Link. Link's a big deal. Albeit Arlen from Blocknet, no doubt. Blocknet's a bigger deal. It's just that the general public doesn't see it, and they do have to see it for the Blocknet to turn from the deal it is now to a bigger deal. So that's where I've placed the bet for multiple years at this point. Let's take a look at the PRs. So Nix, Zcoin, Electra, Ontology, Peercoin, Waves, IOTEX, whatever the Lisk, Dash, Icon. That's pretty cool. Oh, these are all open. Oh my God, there's 19 closed PRs. Digibytes up in there. Doge, Solana, Phantom. What else? Filecoin, Cosmos. No way. Whoa, guys, come on. That's a big deal, guys. That's Adam. Oh, that's huge. If you could take Bitcoin and mint it on Cosmos, and now you get in your Polkadot and your Cosmos ecosystems up and running with Ren being the cross interoperability solution. Absolutely incredible. Absolutely incredible. So that's what's going on with Ren. The Ren is possibly one of the most important assets in the entire crypto space. I think Curve is one of the least appreciated and under acknowledged and least understood assets in the entire crypto space. Synthetics is one hell of a yield producer, and they're on the verge of, excuse me, the verge of their L2 minting, SUSD minting solution. This produces ridiculous yield. Synthetics is crazy. It's disrupting. It can disrupt legacy financials at the brokerage level, New York Stock Exchange, and oh, Synthetics is. I can't even begin the hype train for Synthetics or what it can do. Loopring is swap. .io. Loopring could pop off at any time, guys. Once they get their AMM contract up and running, Loopring could be huge. I don't have a position in Loopring. Stake. Maybe I have a little bit staking, but it's a trivial amount. I think I have a couple hundred. Yeah, just a couple hundred. Maybe I'll take up a. Because that's the thing. I don't want a speculative position. I'll wait for Loopring to break out. Because right now this is very bearish. This is something I don't want to participate in. This is not a chart that's for me. Even though I'm literally telling you guys that the narrative for loop ring is crazy. Look at this. So I could take my F and convert it to loop ring, 1 Ethereum, for 0% slippage, and loop ring's an L2 solution. So that means there's no gas involved in this. This is going to be a gasless transaction. You go over to Uniswap, it's going to be a $5 transaction. Come on. This is huge. So this is why the fundamental analysis of loop ring says to look at it. But I got to be picky to buy. Picky, picky, picky. And why? Because of the technicals. This is not something I could buy. I cannot buy into that. This is very bearish technicals. So what you want, look at the 4 hour, look at the EMA. And then you go back to Ren and take a look at the 4 hour. Flat. But look at the green guppies. You see the green right here? That means it's flat with a likelihood. And look at the Stoke. So there's confluence here that this is either flat or getting bullish. I mean, in the shorter term, you're going to have an increased slope. You clearly see the increased slope. But it does look a little overbought. But this is why you look at the long term. And this is nice to see. This is really nice to see that we were in the gray guppy region, which is flat price action pretty much, and a flattening of the 200 EMA coming off this real bearish action, which obviously is a very large drawdown, 50% give or take. But we've seen stabilization, and now we're seeing green guppies. This is great bullish confluence, and that's what I really want to see for loop ring. So the technicals combine with the fundamentals to make a ridiculous investment. Lend looks nice and stable, albeit it does have a declining slope to its 4 hour. But what I find interesting, it didn't have much of a mean regression on the weekly. Let's go to the daily because there is no weekly. I mean, it never had a mean. This was really interesting about Lend. Now, obviously, it's a really transitory period because Aave is the asset now, but we're still looking at Lend because we don't have price data for Aave. But guys, you realize like everything hit its mean reversion. Look at this. This is the 4 hour chart on the 200 EMA. Let's look at the daily. There was a mean reversion on the daily for Ren, and if you look at most assets, no synthetics is too new. If you look at a lot of assets, you're going to see mean reversion having hit. But mean reversion never hit for Lend. This thing stayed inflated. And it stayed inflated huge, guys. So literally this little bit of bearish action, this gray guppies right here, doesn't really bother me. And obviously protect your gains. If you see you're starting to dip down, let's look at the 4 hour. So we are a bit on the defensive. We're below the 200 EMA in the 4 hour. But if you see a nice dip down where this gray starts to turn red and you're getting closer to the 200 EMA on the daily, look how far it has to go. I mean, you got another 37% for a mean regression on the daily chart. Now, a mean regression is a very meaningful psychological as well as technological indicator, especially coming off a bubble, which is exactly why I have my eyes closely on Tesla. Now, look, check this out. This is what I see on Tesla. This is a very weak breakout. Is this a breakout? I don't even think it's a breakout. I don't even know what the call is. This is kind of like when this feels like breaks out and goes horizontal. That's the type of breakout this feels like. Look how weak this is down here. It goes horizontal and then bam. So let's look at mean regression on this bad boy. Look at that daily. Look at that daily 200 EMA, and there we look at the weekly. Look at that. Look at what the mean regression would be for Tesla. Oh, my goodness Christ. This is why it's non-touchable. It would be a 72% mean regression. Talk about a haircut. Now, that would be painful. On the contrary, that's when you buy. So, ladies and gentlemen, be picky, picky, picky to buy and quick to sell. Protect your gains. And I started today showing you CoinGecko, how it was in July. I showed you what it was like in July, guys. It was not like it is today. Now is not when you risk on. Now is when you risk off. Now is when you're taking your gains and you're structuring it to produce yield. You throw your Bitcoin into BlockFi. You throw your Bitcoin into Celsius. You lock away 32 Ethereum. You throw it into Celsius. You get 7% until F2 comes online. You get 7%. That's compounding. I mean, Curve's literally giving you 70%, guys. And the yield, that's what I like about this is not yield from a governance asset. Um, this is not yield from a governance asset. This is yield from uh, trading fees, and that's extremely meaningful. Like I showed you guys Pi now. That is yield from a governance asset manifested out of thin air. But when you're talking about an AMM producing yield from trading fees, that is a sustainable source of yield, not just a manifested yield out of thin air. That if there's a sentiment shift, it could totally turn in the wrong direction, which is why I locked in some gains over there. Aave, this is yield because they're a systemic disruptor. I'll go as far as saying that, and I'll get to the comments in a second. I know it's 12 o'clock. But these boys, this is straight up systemic disruption right here. Well, I don't know about all of them, but I would go from Uniswap, Maker, Aave, Curve, WBTC, Compound. Oh my, this stuff is going to change finance, guys. This is incredible. I don't know how sustainable. I don't know if sushi or cream is sustainable at all. But that's besides the point. It's the DApp, DeFi automation, which is like Acropolis and DeFi Saver. Oh yes, now we're talking, guys. DeFi automation. What I miss? Farm it, don't buy it. Damn right, Matthias. Farm it, don't buy it. Albeit I did take a position in Curve because 70% is ridiculous. And listen, even if that goes down to 10%, it's better than a bank account. And it's tied to the volume of the exchange. So in a year, if they're doing $1 billion a day, the yield is going to be ridiculous. All right. Uh, skip the FUD on Link. Any ideas? LRC hasn't popped. I don't know. I don't know. They need that AMM their AMM contract, and once they have that, people could make deposits, and it's basically Uniswap on L2. So that's how close LRC is. Keep your eye on LRC. If liquidity starts flowing to Loopring, it's going to be a really big deal. And it's going to shake up the AMM space, which is basically Uniswap. Uh, Come on, who's the AMMs? Uniswap, Balancer. Well, Curve is an AMM for. It won't shake up Curve. Curve is in a separate category. But yeah, that'll be some serious stuff. No, I'm not excited for anything related to Cardano. I think they're late, and I don't think they'll be able to compete no, they won't be able to compete with Ethereum, Polkadot, and Cosmos. That's the trifecta: Ethereum, Polkadot, and Cosmos. I don't think Cardano has a chance. Um, Pulling option for Ren, probably not. Probably not, unfortunately. Maybe. But the problem is you need a centralized entity to deploy the dark node to the AWS or DigitalOcean server. So there will be centralization to the pooling of dark node of a dark node bond. So centralization has inherent risk. Yeah, right. Look at that. Look at that. Matthias saying Tesla fake out. This is such a fake out breakout. This is a fake out breakdown. This is the opposite of what I've said with like Digibyte had fake out breakouts where you're like in a sim triangle, it dips below support and it rips up. This is the opposite. It's a fake breakout and it's basically horizontal and just weak. It's just weak breakout, and I don't trust it one bit. I don't trust it. Now, I love the company, and I pretty much preface every time I criticize this chart that I can't wait to own it at a price that represents the state of the company. I think Tesla's going to change the world. I don't think $413, whatever the hell it is right now, $423 is not Tesla. This is crazy TikTok kids that have no idea what they're doing, that are prepared to take a 70% haircut. I'm not taking a 70% haircut on double digit dollars, 50 grand, 100 grand. I'm not losing 30 grand because, no, no. I'm going to Warren Buffett the shit out of this. You buy it on a deal when it's a deal, when it's 50%, 70% from its highs. That's when you buy something like this. And man, this is weak. I mean, this is well. I was talking about how do you identify the trend shift in crypto back in beginning of September, and you saw it. You saw it on the 24 hours. The change in the winners over 24 hours. It was completely different assets that were moving. And you didn't have those 20% Bancor rips, those 20% Kyber rips, those 20% Aave rips, those 20% Cosmos rips. The rips weren't there. And you guys telling me you guys got to see this. Look at these rips. This is your irrational exuberance right here. Here's your 10% rips, 20% rips, 10% rips, 20% rips. And you're telling me this doesn't feel different? This is a trend shift, ladies and gentlemen. This is how you spot a trend shift. This is how we spotted a trend shift in September when I suggested everyone go risk off on crypto and protect your gains. This is how folks in 2017 made out like bandits. They made fortunes. They turned 50 grand into millions. They turned 10 grand into hundreds of grand. And we'll do the same thing again because now we're pointing out these observations and we're documenting them, and we could go back and we could look at them and we could talk about them and ask questions and study them so we could be prepared when we see them again, capitalize on them. And that's the name of the game. Matthias says Tesla should just make a token, move like a crypto. Yeah, right? I agree, my man. Yeah, that'd be just crazy. All right, everybody. Always a pleasure. Monday, 12:06, October 5th. My favorite time of the day. Thank you ever so much for joining me. Today's another day, and I look forward to talking again tomorrow. Y'all have a wonderful one. Peace.